Silver has just done something no analyst, no historian, and no trader was prepared for. On December 10, 2025, the price shattered every record in existence, hitting $61.86 per ounce, pushing past the legendary $50 peak from 1980 that stood untouched for 45 years. This isn't just another market rally. This is uncharted territory. Every investor watching today is asking the same thing. How far can this really go? When a market faces a real physical shortage, the world reacts fast. In October alone, China airlifted 660 tons of silver from Shanghai to London because vaults were literally running dry. Cargo planes loaded with metal. This only happens when the supply chain is breaking under demand. This isn't rumor or hype. This is hard evidence of scarcity. And when demand goes vertical, the price almost always follows. Today, the Federal Reserve cut interest rates, and that single move poured gasoline on the precious metals fire. Lower rates push investors straight into safe assets, and right now, silver is the #1 target. Meanwhile, social media is exploding with predictions. $80, $100, even higher. But behind all the noise lies one undeniable truth. Monetary policy plus real shortages is a combination markets rarely ignore. If you had invested just $10,000 into silver at the start of this year, you'd be sitting on $19,000 today, a full 100% gain. Silver has officially outperformed stocks, outperformed gold, and outperformed almost every major asset. This doesn't look like a lucky rally. This looks like a structural shift in the market. For many investors, this moment ESN Tejas profit. It's a wake-up call. Our story begins in the 1970s, when the U.S. economy was barely holding together. Inflation hit 13.5%, gas lines stretched for blocks, and global tension exploded with the Iranian Revolution and the Soviet invasion of Afghanistan. Every news broadcast felt like another crack in the system. And in the middle of this chaos, some people lost faith in paper money entire. Land turned their eyes towards silver. 3 billionaires from Texas, Nelson Bunker Hunt, William Herbert Hunt, and Lamar Hunt, decided that the future wasn't in dollars, but in silver. In 1973, they began buying at $3 per ounce. Slowly, their buying turned into a mission. They filled vaults, chartered tankers, and accumulated over 100 million ounces, as almost 1/3 of the world's supply. When three men control that much metal, the entire market feels it. From 1979 to 1980, silver transformed into a rocket. Prices shot from $6 to $50, a staggering 713% in 12 months. The Hunt brothers became billionaires on paper. Jewelers panicked, regulators watched closely, and even Tiffany & Co. bought a full-page ad condemning the hoarding. This rally wasn't natural. It was engineered. And every engineered market eventually reaches its breaking point. March 27th, 1980, Silver Thursday. Prices began falling, and the Hunts' leveraged positions started collapsing. Margin calls poured in, including one for $100 million they couldn't pay. In a matter of hours, the silver market imploded. Prices crashed from $21 to under $10. Traders panicked, and the financial system shook. Manipulation always ends the same way. This collapse became legendary. Fast forward to 2011. The world was still recovering from the 2008 crises. Inflation fears were everywhere, and silver surged from $30 to $49.45 in just 4 months. Everyone said this time is different, but on May 1st, the market cracked. Silver fell 30% in 5 days and kept sliding for years, ultimately reaching $14. Those who bought the top didn't see break-even again for 13 years. In 2021, after the GameStop saga, Reddit traders tried to squeeze silver the same way. Prices jumped briefly from $25 to $30, but the rally collapsed within days. Why? Because you can squeeze a small company, but not a $1.5 trillion annual market. The hype was huge, but the fundamentals weren't there. And hype, without substance, burns out fast. Look at the pattern. 1980 manipulation, 90% crash. 2011 speculation, 70% crash. 2021, social media hype, instant failure. 3 different eras, 3 disasters. History tells us the same lesson again and again. If a rally isn't built on solid fundamentals, it collapses. But 2025 doesn't fit the old pattern. For the first time, the driving force is real: physical shortage. Today's silver market is facing a reality we've never seen at this scale. Vaults are emptying, warehouses have space, but no metal. Refiners are backlogged for months, deliveries are delayed, and industrial demand is still rising. This isn't an artificial pump, and it isn't a manipulated spike. It's a structural shortage, playing out in real time, and the market is reacting exactly as expected. Investors today stand at a crossroads. On one screen, all-time high prices. On another, warnings from past crashes. Is this the fourth bubble? Or is silver finally discovering the value it was denied for decades? A storm is forming in the commodities market, one filled with enormous risk and even greater opportunity. One thing is clear: the 2025 silver story is different, and the next chapter is still being written.